Hey guys, how's it going? So in today's video, I'm going to be talking about Zenabis. They go under the name Namaste. I just smoked some Sensei Star before I made this. This is the Sensei Star and this is the Ultra Sour. All I have to say is their buds are pretty high quality. You know, it's false advertisement on the Ultra Sour in my opinion. It's because it doesn't smell sour or it tastes sour. So you know, and that's, in my opinion, that's kind of false advertisement. But they do have high quality weed. There's some cannabis I won't smoke out there, like from Organigrams. Organigram has horrible product. I refuse to touch anything that says Trailblazer on it. It's just disgusting in my opinion, and I refuse to even get close to that product. But yeah, so there's not really much of a review for Zenabis, but you know, it's okay. You guys can be the judge for yourself. That's why I have to say. I know I still prefer my Canopy and Aurora products. I think they are good products. I like Metro Leaf too. I like Broken Coast. Broken Coast is a good product. I can't wait to try Whistler Medical and yeah. But I've tried most of the products. They range okay. They're better than Afria. They're better than Organigram, but you know, they're still not the top dog. And I think Aurora and Canopy have the top two brand products in the market. I did invest into Zenabis, but then I sold out, but I'll talk about that later. So before I talk about Zenabis, I just want to bring up Afria. Afria had a lot of problems in the company. Management was greedy. The stock dropped all the way down to $5. If you guys ignore that, oh hey, management is greedy, there's something shady going on in the company, and you decide to buy it because you saw you saw it dip out of the Bollinger Band, and you're like, okay, you know what? I think it's being oversold right here. So you end up buying it, and you know, you would have made like a lot of money on the ride up. You would have more than double your money when it, like almost triple your money when it hit $15, if you manage to get it at like $5 exactly. You know, like let's say, like if you were buying, you would probably been crying, but let's say like up here, I mean, but let's say you were like, okay, you saw this trend, you saw this, how it was like, oh, this is a downtrend, this is considered a downtrend. And then you looked at the stock price, you know, let's say you had the ability to put options, you were you know, shorting the market, you would have made a fortune from this decline from 10.51 all the way down to $5. You would have made a huge amount of money on the ride. And then you sold it, you switched to call, or you switched to back to, you know, buying. You would have made a ton of money on the ride up. So, you know, just saying. But Man does have problems. I thought the $250 million would kind of rally their stock like Afria, but it didn't. It's doing the opposite. It's going back down. But so, you know, they do have a lot of problems. They're getting sued. They have a big spending problem, which they say they're going to fix. But I guess proof is what we want. We don't want words. We want proof as shareholders. So if they could prove that next quarter they can increase their earnings, yet decrease their spending and lose less money, that would look like a very positive sign, and that would really propel Man stock. So proof is more important than words at the moment. I have listened to Man's earnings report. They said that they're at a stage where they don't need to really expand to any more states, and they need to focus on profitability. That's what they say. I don't know, but if Man ever actually comes out with a profit instead of a loss, that would shift investor segment big time. So it's very important that they can manage to do a profit and still they'll release like 50, 60, 70 million dollars per quarter. That would definitely shift segment, shift investor sentiment. So okay, now on to Zenabis. So I saw this purple line developing, the 50-day moving average. I saw this 50-day average moving and developing. So I quickly sold out of my Zenabis because I had a total of about 30,000 shares of Zenabis. So that's about $100,000. Was it? Yeah, it's about more than 50. I don't remember the numbers. I think it was 30,000. I could be totally wrong, but it could be more. But I know I had like $100,000 invested into Zenabis. I sold out probably at a good $5,000 loss because I saw the purple line developing, and so I decided to sell and stay out of the stock and just watch the stock. And I was right because the stock went all the way down to $3. I could have bought it, but I'm thinking that it's gonna downtrend. So I don't think this is gonna be over anytime soon. I think it'll get to like 339 at best, fall back, and then maybe bounce back to 339. Not until the purple line crosses with the orange line is when it will become bullish. There was a lot of news on Zenabis, but regardless, it's they're still on a downtrend. It's still risky. In my opinion only. You guys can buy it all you want. My opinion, I think Zenabis is risky right now. I think if you can manage to get it around $3, that would be less risky. If you can get it below $2, like $2.50, that would be that would be pretty good. If this stock can make new lows, that would be a pretty decent price. So just my opinion though. So but honestly, right now, I don't think Zenabis is a buy. I think if it declines a little bit more, it will definitely pique my interest, especially if it goes to $2.50. So if it does ever go to $2.50 or close to $2.50 or even like below $3, I may make a position back into Zenabis, but as of now, I'm not. Namaste. Remember Zenabis brand name, Namaste? Just kind of want to talk about Namaste a little bit. Clearly, we could see that Namaste is downtrending. It may bounce. It may bounce to 74 cents. But I'm thinking that the Bollinger Band's also tightening, so it's either gonna go up or down. But I'm thinking that it could go down even further. If the stock goes to a certain price point that I like it at, I will gamble purely on the asset because I'm not gambling it on management. I'm gambling on the asset at a certain price point, but that's it. But I'm not gonna put a lot of money into it. It's just gonna be pure gambling, like maybe 5,000, like a gambling play. Zenabis, it had recently had a big, not skyrocket, but a big jump. Recently, up 8.2%. The news was they completed $50 million of the first tranche of $75 million convertible debenture financing. Right now they still have a market cap of $6 billion. $600 million. Their share count is actually a lot more if they dilute all their stock. It would be almost 225 million. So the market cap, it may look cheap, That's right. Zenabis may look cheap, but market caps can easily go down. It doesn't. No, $628 million doesn't have to be like. I don't know if $628 million is the correct price for it or the bad price for it. At the end of the day, shareholders make up the market cap. So obviously there is some decent sized shareholders in this company, or else they would have a $628 million market cap. At least in my opinion. So no, they have a decent market cap. Could it go up? It depends. If if management can get rich people to buy their stock instead of, like, I say, Aurora stock or Canopy stock or Madman stock or this Kira stock. There's so many different companies out there. So I mean, Zenabis has to really show it in the revenue numbers. I think that's important. If Zenabis can prove themselves to be a profitable company, make a lot of money, sell a lot of product, then shareholders will reward this company. But as of the moment, I think it's risky because we don't know for sure what the future revenues are like. I guess it's kind of a positive sign that the CEO came on came on the internet and said, we are, I'm not paying myself money. I'm working for free. He does own shares. So he's working for free until, the share price, until the stock hits a certain anniversary and the stock price hits a certain share price. So that's why he's saying, so it sounds good. It sounds like, he's a good guy. I don't know, I don't know for sure. He could just say that to help pump his stock, but we don't know for sure if he's a good guy or he's a bad guy. But he sounds like a good guy. So yeah. Introduction. So Zenabis has 0. This is the investor presentation. I'm just pointing out some important points. Zenabis has 0.7 million square feet of growing space, 2.8 million square feet of greenhouse. So this is the indoor. Aurora has way more than 0.78 million. They have like, wait, no, I think they do have 0.78 million. Because they have like small facilities only, like everywhere around the city or in the country. It's all like 55,000 square feet, except for like the Metro Leaf indoor facility, which is 255, and then the Canopy is 100,000. Yeah, no, I think that's about right. Canopy has the most indoor. For greenhouses, Canopy has the most greenhouse. Aurora doesn't really have a greenhouse, but let's say Aurora Sky is kind of a greenhouse. So yes, it's a greenhouse, and they say they have 3.5 million square feet of greenhouse, and the company's worth 0.8 billion, so 800 million, while their competitors worth 12.6 billion. See, at the end of the day, shareholders make the company. There are fat shareholders in Aurora, and there's no fat shareholders in Zenabis. Zenabis could easily be a $9 billion company, a $10 billion company, a $12 billion company. It just depends on the shareholder. If there's fat shareholders, there's lots of money in Zenabis, the stock will go up. So they have to prove themselves in order to get rewarded by rich people, essentially. Tilray, $9.7 billion. Does Tilray deserve to be $9.7 billion? No, but it is, because it has some fat shareholders. Kron, same thing. Kron deserve to be, actually Kron is way more than $5 billion. They're like $9 billion because they just diluted the stock. So, does Kron deserve to be $9 billion? No, like I said, it all depends on the shareholder. Zenabis, yes, Zenabis has, operations in a lot of a lot of provinces in Canada, they don't have Ontario, but eventually they will probably get Ontario. But as of the moment, they don't have Ontario. Ontario is a big one. Like, Ontario is like a must. Quebec, do they have Quebec? No, they do have Quebec. Yeah, that's right. Quebec's a big one too. Quebec's actually quite big. So these are all their facilities. Both of these are still being developed. This is the only one that's 100% complete, which is producing about 5,000 kilograms, and is also the facility for producing oils. These facilities are still being developed, and once they're complete, they will be able to produce not even close to Metroleaf, apparently, because Metroleaf, I think they advertise 28,000 kilograms out of their 210,000 square feet facility. This is the production. This is the milestones like chart. They expect by Q2 of 2020 they should be producing 461,000 kilograms. You know, if they could sell all their products, great. Like I said, there's a lot of competition in this market, and they need to have some kind of special edge against Aurora and Canopy in order to really be a big true leader and become, you know, multi-billion. But I mean, I'm not saying Zenabis doesn't have potential to be a multi-billion-dollar company. It does, but it's tough because they really need to convince, you know, rich people. No, this is no. You guys can read this for yourself if you want. And okay, that's it. That's it for the video. Thanks for watching. I hope you enjoyed this. Wow, 17 minutes. 17 minutes. That's crazy. Enjoy the 17 minutes video that I'm making. Give me a thumbs up. It helps my channel grow, and have a great day. Bye.